Hello, traders. Welcome to our weekly outlook for the week of January 23rd to January 29th. So, right now is January 22nd, Sunday, Eastern Standard Time at 11 o'clock p.m. So, let's take a look at a weekly perspective. First of all, what happened last week. Last week, the few main events, of course, first was the Prime Minister May's speech, which was released, I think, last Friday or Thursday. They start leaking out this information that she is about to give this hard Brexit talk. Market reaction was not that volatile, but then over the weekend, I think from some newspaper in London or Britain, somebody released that the talk is going to be hard Brexit, and we saw this market gap down many pips during the Sunday opened, and all the way until Tuesday when she finally gave out the speech, which basically we saw pumped climb up to 3 or 4% again. So really a huge roller coaster ride for British pound last week. Now the real catalyst is really, it's not even a hard Brexit talk. It's really the extreme emotion, the extreme pessimistic and optimistic emotion. And some people call that buy the rumor, sell the fact. Some people call that short squeeze. The real fundamental statement is that when the market is highly emotional without a fundamental base, that's really what you witnessed last week. So in this kind of moment, really, if you ride on a good trend, you generally can make some good peeps. The rule of thumb is just don't jump in the trend. Really, you can. The safest way is to wait for the market to calm down. So a lot of people go short in cable after Wednesday. And when the market is finally calmed down, you can actually short the pair that has gone up, 300-400 pips without a fundamental reason. Those are the moment you can actually a high probability trade. So that was the biggest events last week. Second event, of course, is the ECB meeting, which really they kept the rate unchanged, but the tone was very dovish, and really pretty much reassure their determination for the continuation for the low rate easing environment. Now, of course, this is going to put a fundamental pressure into euro, and the euro outlook fundamentally is bearish because of that. And Bank of Canada also have the rate meeting last week, which they kept the rate unchanged, but they completely changed their outlook. Basically, now the rate cut possibility is back on the table. And not only that, the reason it's back on the table is because Donald Trump is going to renegotiate the NAFTA, the North American free trade deal with Canada and Mexico. And today from the Sunday Post, it's already saying that he is going to renegotiate. So that's really the major uncertainty for Canadian dollar right now. Fundamentally, Canada also has a CPI, core CPI retail and core retail last week. Although both are negative than expected number, the number was for retail, for core data, it's for core and headline, it's all quite negative. So really, on top of that, both the economic outlook and right now the sentiment for Canadian dollar is really quite bearish. The only thing that's supported is the oil market. Now, over the weekend, we have the OPEC meeting for some of the oil producers. Basically, they show that they have made 80% of the target. So the oil output curve is right on the track. That's supposed to be quite positive in terms of sentiment. But as mentioned, because of the doubt over the OPEC, so market really needs this kind of fresh data to support oil. Nevertheless, the general direction for the oil market is an upward movement, and really, I do expect it to at least boost the oil price to $60 per barrel. I don't think they will have trouble to boost the oil price to that level, but if it's going to be a smooth way up, I doubt it. It's probably going to be very volatile. But as for now, Canadian dollar is not looking good sentimentally for sure because of its few events. And finally, Friday, have Donald Trump took the office with inauguration, and the market didn't really have much reaction during the speech because the speech was not particularly positive or negative, right? It's Donald Trump's speech. But afterward, we did see dollar being sort of all the way until today. And really, I think the catalyst mainly is this uncertainty for US dollar because, he is going to be the president of these powerful countries. So really, that's the uncertainty. But fundamentally, US dollar, from the data, or last week we have Janet Yellen spoke, and everything is still looking very strong and solid fundamentally. So the short-term sentiment is quite bearish for US dollar, but long-term fundamental is quite bullish. And of course, last week the biggest winner was Australian dollar and New Zealand dollar. They both have gone up many pips, and main reason is because the dollar weakness and also the commodity price has kept going up, and that really was supporting Australian dollar and New Zealand dollar both respectively is because the weakness of US dollar. And basically, if you're comparing 8 major nations, those two are really like the short thing for now. They're really outside this political turmoil. They really are isolated in the southern hemisphere, really on their own. And just in conclusion, they are quite isolated, quite solid, and they're really more related to China than US. So as last week, we also saw the Chinese GDP data, which was quite positive. It's better than expected. Of course, China still has this debt issue that's that's shadowing their outlook. But as for now, as long as China keeps growing, as long as the commodity price keep going up, as long as the dairy price keep going up, you will see Australian dollar and New Zealand dollar being a more of a certain bullish currencies. So the current update for euro dollar right now is fundamentally bearish and sentimentally bullish. Now, why is fundamental bearish? As mentioned, the ECB has shown their determination to cap the low interest rate market and cap the easing market, really all the way until April when they will release the detail on which, because they say they're going to roll back the bond buying program a little bit, but the amendment, the new program will continue until December. So as long as their stance are the same, we do expect to see euro dollar being fundamental bearish because of that. And they also, of course, highly disregarded the inflation from many European countries. Most European countries actually show a higher inflation data from December. Nevertheless, ECB said that's because of the high oil price. It has nothing to do with economic recovery. Or even if it does, it's not strong enough for ECB to do anything about it for now. So because of that, fundamentally, euro is still remain bearish. Why is it sentimentally bullish? It's really because of the US dollar. So right now, because US dollar is sentimentally bearish, and that's why euro is sentimentally bullish, as they are really the biggest currency to trade, as euro dollar is the most tradable currency pair. So of course, for US dollar, it's the exactly opposite, fundamentally bullish and sentimentally bearish. Bullish because of their solid economic data. The Federal Reserve's outlook for interest rate hike is almost certain. We're just really debating whether it's going to be 2 or 3 times. And inauguration did not really cause too much volatility. Basically, I think the market has adjusted to Donald Trump's, because although he is unpredictable, he's not crazy. That means a lot of policy, a lot of cabinet members are still pre-selected. A lot of policy are already released. So really, all this up and down is based on the sentiment, not really the fundamental data. Now, when you look at this analysis saying that, okay, fundamental bearish, sentimental bullish, what am I going to do with that? I think it's really depends on how you trade. Of course, all things is going to revert back to the fundamental eventually. So if your outlook is more long-term, it's more like a weekly perspective, then you really can pretty much ignore the sentiment. You can really look at the technical chart to see if they have an entry, and as long as the fundamental is in your side, you can actually place a trade in this kind of simple method. If on the other hand you are more a short-term trader, you actually doing a day-to-day trade, hour or 4-hourly, then sentimental events are important for you because sometimes you will get stop out only to see the trade finally goes to a direction. So sentimental reason will be important. Now, if you are more like intraday traders trading hourly or even shorter time frame, sometimes you can ignore the fundamental side of the trade and really just trade what's happening right now. For example, British pound right now is fundamentally bearish and sentimentally bullish. So a lot of people buying British pound will actually be able to make some money, although it's a fundamental bearish currency. And British pound fundamental bear is again because the outlook of the Brexit is still up in the air. Yes, we do have Prime Minister May gave out a clarity for the plan, but whether European leaders, how are they going to cooperate with Britain, or how are the negotiation is going to be, nobody knows because they haven't triggered Article 50. And as Euro leader keep mentioning that if they don't trigger the Article 50, there is no formal negotiation. Of course, this week the High Court ruling is going to come out again, and that's going to be a risk event that's very tradable. I will go over that later on. UK inflation also hit 2 years high in December. Now, what's that gonna tell us is that we're now really seeing the effect of the low currency. So because British pound has been devaluated ever since Brexit, the things will become very expensive for producers, and that's reflected in the inflation already. So although you do see the economic data actually performed quite well after the Brexit, but right now the effect has slowly kicked in. As last Friday, we have the retail sale month to month as a huge negative surprise for British pound. That's really an early sign that now the economy might really taking a downturn, because now goods are going to be more expensive, not because the economic expansion, it's nothing to do with the economy. It's really because the currency become too cheap and too fast. So that's really going to stop the household consumption, and hence it's going to deteriorate the economic, the GDP of Britain. So that's going to something to take into consideration. It's going to slowly show in their data, and that's where the fundamental eventually going to revert back into the currency. But sentimentally, they are quite bullish because at least for now, things are finally have some clue for the future. So people have regained confidence. Some people are actually thinking that British pound has been oversold. They actually thought that British pound, for example, versus US dollar cable should be at a level of 1.28. And that's, I don't know whether that's true or not, but generally, that's what the market is becoming a bit of sentimentally bullish, and that's what happened to the British pound right now. Canadian dollar, again, is fundamentally neutral actually, because although we do have disappointed CPI data, retail data, we actually have a good labor market. So we have a good employment data a couple weeks ago. So that really shows that it's quite neutral, and the Bank of Canada is still holding their interest rate. Their CPI, although it's negative, but in the larger picture, it's still meeting the target. So the only thing that's up in the air is the North American free trade deal with US. So that's what caused this sentimental bearish right now. On the other hand, oil market can also support Canadian dollar because, as I mentioned, in a long-term perspective, we do expect to see oil at least climb up to $60 or more per barrel. That's more like a certain. So that's what's going to support Canadian currency fundamentally. But because of the last week's talk, and right now this trade deal with US is really going to put Canadian dollar at a sentimental bearish position. Now, Australian dollar and New Zealand dollar are both fundamentally neutral and sentimentally bullish. Now, they are bullish, of course, is because right now, in the absence of US dollar, and because their geopolitical position, everything is quite isolated from this, populist movement, basically, from this political turmoil. They're quite bullish sentimentally. And also, commodity price has picked up quite well to support Australian dollar. dairy price, GDT price was also positive last week to support New Zealand dollar. So they both are fundamentally neutral. Why I say neutral is because Australia actually last GDP data was minus 0.5%. So that was a huge contraction for Australian. And New Zealand dollar, although performed better than Australian dollar, is still quite weak fundamentally speaking. So it's really nothing too positive. You wouldn't really see their central bank to raise interest rate anytime soon. But sentimentally, they are both bullish because of this market right now and because of the Chinese expansion, which continue to support these two currencies. Now, on the other hand, Japanese yen and Swiss franc also are the same position, both fundamentally weak and sentimentally neutral. They really don't have any major news or events on their own in terms of their own economy. So really, these two currencies just react to the risk events. If we have a very risky event to cause a risk of sentiment, then the safe haven currency effect is going to help Japanese yen and Swiss franc. And that's what you're going to see in dollar yen right now. But in terms of the economic outlook, really nothing much to talk about it. But they do perform quite well if you sense a really risk of sentiment. That's also very, very supportive for Japanese yen and Swiss franc. So this week, Monday, we have the ECB Draghi going to speak again. Really nothing much about that at 6:30 p.m. Eastern Standard Time. It's not, I don't know what's the content. I don't even know whether it's going to be a live broadcast, but nevertheless, that's something to pay attention to. We also have flash manufacturer PMI from Japan, not a tradable event, but again, something to pay attention to. Tuesday, you have a flagship manufacturer PMI and service PMI from both France and Germany and Europe. But the biggest event is the High Court ruling from UK. Now, basically, the court is going to rule whether the Brexit has to go through the parliament or whether it can just be decided by the government. Now, I have to stress enough that fundamentally, it's nothing new. This is a appealing case. Now, even if the High Court says that they only need to go through the government, last week Prime Minister May already said that the Brexit will go through the parliament. So really, regardless of the result, the Brexit will most likely go through the parliament. However, as I mentioned, British pound right now is a sentimental currency. So this event is going to cause some volatility. If you see the ruling in favor of parliament, of course, that's going to be bullish for British pound. On the other hand, if you see the ruling in favor for the government, it's going to be bearish for British pound. So really, that's what you're going to trade on this event. I don't really have any bias for that because right now it's really just sentimental driven for British pound. On the Asian session on Tuesday, we also have Australian CPI data and TRIN-MIN CPI. Now, TRIN-MIN CPI is another measure of CPI, and that's actually more important because RBA, Reserve Bank of Australia, has already said that that's the data they are looking at. So this is going to be important data for Aussie, and as mentioned, Australian right now is fundamentally neutral. So really, this data can be the main driver. If it's a positive data, on top of that, plus the already positive sentiment going to boost Australian dollar again. If on the other hand, if it's a negative data, then it's going to pressure Australian dollar. We will have to see what happened to US dollar on Tuesday to decide which pair to match, but just give you an overall risk events what's going to happen. Wednesday have crude oil inventory. Now this is going to show us whether the OPEC can really lift up the oil price. Now inventory is from US, nothing to do with OPEC, but if the inventory is a drawdown and OPEC is trying to inject this positive sentiment, then of course it's really going to raise the oil price up, and hence it's going to help the Canadian dollar. Now on the other hand, if the crude oil inventory is a large build-up, it's going to diminish, it's going to pressure WTI, it's going to pressure oil price, further pressure Canadian dollar. We will also have a CPI data from New Zealand. It's the same reaction from as Australian dollar. If it's a positive surprise, it's going to support New Zealand dollar. If it's a negative, it's going to pressure it. So really, I don't have a fundamental outlook in terms of trading this kind of risk events. You just really go with the flow, see what happened to the data. If the data is a surprise, I will trade. If there's no surprise, generally speaking, I don't really like to jump in and trade these kind of events because the probability is just not too high. We're not gonna see too much reaction. Thursday, we'll have preliminary GDP from UK. Now, this is going to play a big effect because if Tuesday, the High Court ruling is in favor for the Parliament, which means that the sentiment is going to be strong for British pound. And if Thursday, the preliminary GDP is also a positive data, then you can buy British pound. You don't really need a surprise. On the other hand, if you have a High Court ruling in favor for the government, and a negative GDP data that you can sell British pound. On Friday, we also have advanced GDP from US. Now again, that will be either in line with the sentiment of US dollar or not. So let's take a look at our technical analysis and see what happened. Just give me 1 second. All right, so let's take a look at our weekly candle. Take a look at our 28 pair. Just give me 1 second. Okay. Well, since we're in the dollar yen first, let's take a look at dollar yen. So last week, we finished the week with kind of indecisive movement. Now we go as low as 112.50, as high as 115.62. So about $300 moves. But generally speaking, if you zoom out, dollar yen is really going in an uptrend with a slow correction during 2016, and this is really due to the US election. Right after Donald Trump gets elected, everything looks well, and we cross over the 100-day moving average, 100 weeks moving average. And now we're really looking more in upside down. Now weekly is more in line with the fundamental. So yes, fundamentally dollar is still looking up, but as you can see already, we opened a week with a downtrend. So just show you that the sentiment is still quite bearish for US dollar. So let's take it. Just give me 1 second. Let's take a look at Euro Pound. So Euro Pound, last week you have this gap up, it closed down. This is a very, very textbook. I forgot the name for the candle, but it's quite bearish signal. But fundamentally, they both are fundamentally bearish. So I'm not really taking any weekly trade if I don't have a strong fundamental bias. So I'm actually only going to, I'm not gonna spend too much time talk about things, like Euro Swiss. Really nothing happening here. Euro dollar, it will be something worse for me to sell. I don't have anything right now, but just keep it on this Euro dollar. Euro Aussie will also be good to sell. I also don't have anything right now. Actually, on the contrary, I have this reversal signal from last week. So as you can tell, the Australian dollar has been largely bought off. So we could see some reversal this week. EuroCAD also is nothing to look forward. Euro Newsy is something looking to sell, but same thing, you have reversal signal to actually maybe going up to a higher level. Euro Yen is also nothing to take a look at, weekly speaking. Pound Swiss, again, nothing to talk about. Cable is something that I'm looking to short. We do have this strong bullish candle, and as mentioned, because this is weekly, so I tend not to do any fundamental. I tend not to do any trade that's fundamentally opposite. So I'm not going to buy cable, but if you go to a short time frame, and if we do have few risk events that are tradable for British pound, then yeah, you can actually definitely buy British pound on top of the strong sentiment. So pound Aussie is just give me 1 second. Okay. It's not coming out. Interesting. Okay, cable. Let's look at pound calf. So, okay, pound Newsy, same thing. You actually have a bullish signal for pound Newsy. Pound Aussie, you also have a bullish signal for pound Aussie. So it just shows you, because it's a weekly candle again. So going to the daily chart, we might see something that's worthwhile to buy if we have the continuation of a strong sentiment. Now, pound yen is actually something that you could buy in terms of the weekly perspective, but it's still not something I like to do because they both are fundamentally weak. It's not something I like to play around in a weekly perspective. But just to show you what happened last week, it's a very strong sentiment for British pound right now. Now, Swiss franc, Japanese yen is not something I pay too much attention to. Dollar Swiss continue to go down. Dollar CAD, it's quite well going up. Then this could be something that's worthwhile for us to buy into it, providing that if we do have a strong sentimental reason to get in. But right now, US dollar is strong, but Canadian dollar is not fundamentally weak. It's fundamentally neutral. So it's really not something I like to, because what happens is that if you get into this kind of trade, you're most likely going to see this kind of sideways movement. So again, this is more like a weekly perspective. So you really want to get into something that you have a strong strength versus weakness. Otherwise, a lot of time, it's just going to a sideways movement and you are really just wasting your capital in this kind of trade. Dollar yen, again, it's something we're looking to long, but don't have a good spot or signal. Aussie Swiss, it's also something we're looking to go long. Aussie dollar, we're staying out in a weekly perspective. Aussie CAD, we also staying out in a weekly perspective. But we do have this huge movement last week again. Aussie Newsy, nothing to talk about. Aussie yen is quite bullish in terms of weekly perspective. You just cross over this 100-day moving average. So if you have a continuation or we have a signal here, yeah, it's nice to buy into it. CAD Swiss is nothing to really talk about. They both are, not strong or weak. CAD yen, same thing, nothing to take a look. New Zealand Swiss, New Zealand dollar, New Zealand CAD. I don't have this candle coming out. Okay, it's kind of slow my connection right now. New Zealand CAD. Okay, so that's just a weekly. Don't have any signal, don't have anything, which is very normal for a weekly perspective. Let's take a look at daily trading. So last week, let's go to Euro Pound. So last week, again, we take a look, we gap up only to close the gap and penetrate the gap. And right after that, you actually go into a sideways movement for Euro and British Pound. Nothing much happening here. This week, it is definitely tradable because of the sentiment from British Pound. So we'll see what happened to Tuesday's High Court ruling. We'll also see what happened to their GDP data. Euro Swiss, it's nothing to talk about, really just sideways movement. Now Euro dollar, a continuation of going up. And from last week, we opened a market with really not much movement and then continue surging up, going down. So really it's just a roller coaster ride, up and down. And then finally, you start with the ECB meeting, which boosts the euro going up again. And then you have the inauguration of Donald Trump, which further weakened the US dollar. And right now, it actually goes up again. So this is actually a good area to sell euro dollar. But we do need sort of signal coming up, but we are really going up more to this attractive area. If we are going up to 108, that's perfect, or 108.50, that's even better. So really looking for something to short in terms of euro dollar, but just knowing that we need a catalyst to shift the sentiment, because otherwise, right now it's really just going up very strongly for euro. So we do need a catalyst to shift this stance, or if technically you hit certain strong resistance, then yes, you could also short it upon those area. So that's a euro dollar perspective. Euro Aussie last week, on the other hand, it's continuation of going down, only to further buy back at the last day of the inauguration. So this phenomenon, due to the risk of sentiment, really people have been buying Australian dollar, and now really you see a lot of profit taking. You also see a lot of, basically, people want to stay out of market for now because they want to see what happened exactly to Donald Trump's policy movement. So a lot of people are not going to commit such a huge amount of money, really want to see what happened first. EuroCAD, on the other hand, continue going up, especially due to the weakness of Canadian dollar. So EuroCAD could be something that's nice to sell sentimentally also. So euro is actually a currency that is actually a very attractive for me to sell, but because of we are really climbing up to some of the nice area. British pound, as you know, you got gap down, gap up for pound, Swiss franc. For cable, you have exactly same movement. So pretty much British pound has exactly same movement. We are near 125, which is a critical area because of the this resistance zone, but also because of the psychological handle of 125. So again, cable will be a very good currency to either buy or sell. Again, I don't have any bias in terms of this kind of short-term, mid-term perspective. Really depend on the sentiment. Pound Aussie, same thing. You got a gap down, gap up. Pound CAD, you actually continue, not only have a gap out to close the gap, you continue to going up. Again, we are right at this kind of critical area. And Pound New Zealand, exactly same thing. And Pound Yen, actually same thing, keep going up. So really, British Pound, how to trade it for this week depend on the risk events of Tuesday. That will be a really good catalyst to either buy or sell. Swiss franc, Japanese yen, nothing really much to talk about this. Dollar Swiss franc continue to going lower. Dollar CAD also, it's a strong currency for Canadian dollar. We go as high as 133.87. I got out of this trade at 132.90, which is where it is at now. Really just right before the inauguration. So it was a quite good trade, but I got out of it because of the dollar weakness, which I anticipated the sentiment to continue, which it did continue until now. So we'll have to see what happened. And dollar yen, same thing. I got out last week at break even, just right after the inauguration. Really nothing happens, and I decide not. 11430 was my. Remember, I got in at this green candle. I do not like the second day. I don't even like the third day. This was the inauguration day. So I decide, hey, I don't want to hold it anymore. So I got out at 114 at the same place. I'm 114.80. I got out here during the inauguration, or probably just after the inauguration. And then we didn't close too low, but it would have stopped me out anyway. And then today it dropped another, almost 100 pips. So I'm happy I got out. That's the thing, sort of, you gotta sort of basically foresee what happened in the market. I did send out a trade call, so I hope, those people will also, for people who are still holding it, it's probably not the best idea because the Tuesday, if the High Court ruling caused large buying into British pound, you will continue to see selling of US dollar. So really, it's very much likely to see a continuous selling of dollar yen for this week. But on the other hand, 11250 is another attractive area, so we can really looking forward to buy back. Aussie Swiss, same things, not much going on here. Aussie dollar continue going up because of the dollar weakness, but we are in this kind of critical area right now. So this week's Australian CPI data again will play a big effect here. And let's take a look at Aussie CAD. Aussie CAD continue to go higher, but really you're right at 1.0075. This is again another critical resistance area. And Aussie New Zealand, Aussie Yen, CAD Swiss, and CAD Yen. Now, if technically speaking, CAD Swiss would be a nice place to buy back. You do have this technical 3 crore candlesticks. You got selling. Seller is being weak. It's very strong, getting weak, getting another very weak, at least 200-day moving average. So technically speaking, this is definitely a nice place to buy. But so we could buy it, we could do it, but we have to see what happened this week for Canadian dollar. First of all, we have to see the outlook for oil market. We also have to see what happened to the crude oil inventory, and finally, we have to see exactly what happened to the North American free trade deal with US. So those are the 3 catalysts that you could buy back Canadian dollar, because Canadian dollar was largely sold off last week, and that was due to sentimental play. So these are all pretty good area. Yen, again, nothing much happening here. You actually have a slow gap down here today. And let's keep going. New Zealand Swiss, really just a sideways movement. New Zealand dollar again continue going up. New Zealand CAD and New Zealand Yen. Now this is just thing about technical trading. You do have this kind of a nice kangaroo tail, so it just shows you this is a very nice area to sell. But you still need some sort of catalyst to get in. Like if we do have that, if you actually, I say if we have a good news from Canada, then CAD Swiss, technically this is a great area to buy. On the other hand, if we have continuation of negative sentiment from Canada, then New Zealand CAD will be a good place to sell. So this is sort of how you incorporate fundamental into a technical trading. So that's what happened for now. Now this week, as mentioned, right now it's just we have 20 minutes into Monday midnight. Really nothing much on Monday except Asian session. Tuesday again, you do have a high call ruling for British pound. It's very important, and you also have the trimming data from Australia. These are tradable events. Wednesday, crude oil inventory and CPI data from New Zealand. Those are pretty good to look at. Thursday, preliminary GDP from British pound, and Friday, advanced GDP from US. That's for the risk events. As in terms of the political events, pay attention to what happened to Donald Trump. It is his first week as a US president. It is going to cause a volatility because it has already caused a lot of anticipation. So if you are an intraday trader, it will be a good time to trade these kind of events. As for our current trade, we are actually still in New Zealand Swiss. So we're still in this trade. Really nothing expected here, really sort of a sideways movement. I'm still holding it because my fundamental perspective is still the same, but I do move my stop loss to break even, which is really just 20 pips away. But we do have a very low daily range for New Zealand Swiss, about 60 pips only. So really don't expect much from this. Might just get stop out. Euro New Zealand is the same thing. I do have my stop loss at break even, and really don't expect too much from here again. Now Monday, if Euro has continuation of bullish sentiment from ECB, then we might get stop out. On the other hand, if we have a negative sentiment, we might keep holding this trade. So nothing to look out for this, and that's pretty much my perspective for now. So that's it, guys. I will be back tomorrow in New York time to give you another daily analysis. Otherwise, that will be my weekly outlook. Okay, hopefully we all have a pretty good week for trading. Thanks for watching. I will see you tomorrow. Thank you. Bye-bye.